Friends, we are approaching the close of this annual management convention for the final session, and the topic is Startups and MSMEs, Ecosystem, Benefits, and Tech Strategies. This session will concentrate on the contributions of the startups to their commercial ecosystem and how to leverage technology for their growth without any financial fallout. To deliberate on this and offer us insights, we have Chartered Accountant Jomon K George, who has come all the way from Kochi to address us. And it gives me immense pleasure in introducing this co-professional. He is a fellow member of the Institute of Chartered Accountants of India with 21 years of experience in practice, founder and managing partner of JVR and Associates, a 6-partner firm specializing in corporate audits and consultancy, founder of Advantage Consulting, a multidisciplinary accounting and consulting firm based in Dubai, chairman of Southern India Regional Council of the Institute of Chartered Accountants of India in the year 2019-20, faculty for auditing at the Institute of Chartered Accountants of India, resource person on accounting and auditing standards and corporate audit, founder of PMG Foundation, a charitable organization supporting education and housing for the economically challenged, serves as a financial expert on KSIDCs, startups, and seed fund schemes, was a consultant of VGuard IPO, which turned a multi-bagger. Over to you, Chartered Accountant Jomon K George.
Thank you, ma'am. I must mention that all the 4 luminaries on the stage are chartered accountants. That's something great. So, over to Chartered Accountant and great speaker, Jomon K George, former chairman, SIRC of Institute of Chartered Accountants of India, for the presentation.
Good evening to all of you. The president of CMA, my dear friend Sujit Kumar, secretary C.A. Ranjini Umesh, other 2 CS giving me company on the dais, C.A. Ravi, C.A. Dawood, past president, another chartered accountant, which I should specially mention, Satish Kumar sir, other very respected members of CMA, invited guests, friends and students. Extremely happy and delighted to be here with you this fine evening and to be part of this 2-day annual convention of CMA. My very special thanks to Sujit and Ranjini for having me here for the last session. The topic is discussed is about startups and MSMEs, the role they play in the economic advancement of the country, in the contributing to the GDP of the country, and certain benefits which they are eligible for, and of course, some strategies in their way forward. Before that, let me also say that the role of management associations, I was secretary of Kerala Management Association, the LMA based in Cochin, a couple of years back, 2 years in fact, overlapped, and we got the best LMA award from IMA. So I know the inside working of how local management associations work in association with the thinking of IMA. I always say that the role of management associations today have become increasingly relevant for the reason that corporates, business entities are today seeking a lot of guidance. They are reeling under various pressures. One could be probably the compliance pressures in a country like ours, like India, and also the challenges which they are facing in the businesses in bringing about financial discipline, raising funds and all that. So being a chartered accountant, I can say that we are rendering a good lot of services there. And I'm extremely happy to see a good number of students, management students here. Some of you from this great temple of learning and excellence, IAM Kozhikode. So happy that the students, and I think the management associations have a very major role in reaching out to the younger generation, the managers and the entrepreneurs of the future. When I say entrepreneurs, I would mean that the young generation today, there's a major shift from being job seekers to job givers. That would probably interest you on the short presentation on startups. With this introduction, thanking the organizers once again for having me here this fine evening. Let me move on to the specifics of the topic. How is the navigation? Is it manual or? top right. Okay, fine. This is quickly the schema of the presentation, a brief introduction, definitions, ministry, registration. After 2 high-tech sessions on metaverse, and of course what we heard from Mr. Vijay, another dear friend of mine from Cochin, this would probably a little bit of back to basics, and this is the real world, not a virtual world. So that's how I would call this session as the benefits that are available today for startups and MSMEs, the funding, which is the most important thing as beginners, a lot of constraints on funding, and I hope all of you are familiar with the term, the funding window, which have been passing through and still passing through. A bit on valuations, taking you to the world of valuations and schemes, other schemes which are available, some takeoff strategies, and from my version of the tech initiatives, from my experience with startups and MSMEs in the last 30 years of my practice as a chartered accountant, and of course, as a management consultant, more into business advisory services than the routine work of accounts and audit. So I think the slide alignment, something is happening. Yeah. So today, as you know, India has close to 93,390 is the exact number, I think so. 94,000 startups recognized with the ministry. This is a huge number, which makes India the 3rd largest startup ecosystem in the world, just next to US and China. And we, given the new startups, new youngsters like you who are venturing out on your own, we are the fastest growing startup ecosystem in the world. And India today is the 5th largest economy in the world, and we are the fastest growing economy. We have surpassed UK, and we have Japan, Germany, China, and US ahead of us. The way India is growing and the policies which are putting India on the fast track of growth, I think soon we will grow in maybe 3, 4, 5 years from now, would become the 3rd largest economy just next to US and China. By definition, how do we, I'm put this slide because this may be slightly elementary, but I was in a meeting in a business group in a city in Kerala, where one of the young representatives of the business house came and asked me, I think I can speak some Malayalam, Jomon, endana is startup? What is a startup? So I thought I'll touch upon these basics. So you have to be eligible for the benefits that accrues to a startup. You have to be registered as a startup, and you have to fall within this very strict definition of startups. It's a private limited company, partnership firm, or LLP registered in India up to a period of 10 years from the date of incorporation registration. Though you are a startup, it doesn't mean that you have to be absolutely new and fresh. Even if you are registered 10 years back, you have 10 years time to get registered, but please note that as a proprietary or a sole proprietary concern, you cannot get a startup registration from the ministry. As my presentation unrolls, it will become clear to you how important it is to be registered as a startup. That's very, very important. And I'm happy that I have a lot of students here who would probably already started thinking of having your own shops being set up once you blossom forth from your college and your studies. The turnover of the entity, the sales turnover, should not exceed 100 crores in any of these financial years. It's not cumulative. In any of these financial years, if you cross 100 crores limit, then you would go out of the definition. And thirdly, an entity is working towards innovation, development and improvement of products and processes, the new gen things which you talk about. And it is a scalable business model. Scalability is a huge thing. Time permits would I would really touch upon when it comes to valuation as well, with a high potential of employment generation or wealth creation. But from my practical experience, let me tell you that the ministry is not very strictly, monitoring this. Registrations are not that difficult. Not very long ago, we got a garden company, a garden maintenance and a garden products company registered as a startup. They are into heliconia and the ornamental gingers, which you generally see in the lobby of star hotels and all that. Even that kind of companies we got registered with the ministry, and therefore, and they had an investment coming in, they had a valuation done, they had a PE coming in from Hyderabad to invest, they found charm in this. Now they're making a lot of products as gifts and all that, pot plants and all those things in Hyderabad. They're taken off really well. And this point is to be noted that an entity formed by, breaking up other units and doing this cannot be a startup by definition. So what we advise is today, many of the chartered accountants have, of course, management consultants, business advisors, have started a new vertical called Startup Advisory. And there's also social cost attached to it. While we talk about, doing advising large corporate houses, it's also important that the advisors come down to the next level, not just looking at the commercial terms, but the potential of providing these youngsters and help them in some way to accomplish their dreams and unleash their potential. So therefore, there what we suggest is that if you have already, there's a company which is running for, let's say, 13, 14 years, having passed the 10-year mark, then what you would do is you should transfer the proprietary technology. What you can do is start a new company, transfer the proprietary technology, and the brick and mortar models, the other assets which you would have as a hardware and all that is not hardly much, it's hardly much. Therefore, you can start on their own and still be eligible to be registered as a startup. The ministry is coming under this is Department of Promotion of Industry and Internal Trade under the Ministry of Commerce and Industry. And the ministry is doing lot of incentives. Even in this budget 2023, there are a lot of incentives which is specifically aimed at giving that much required fillip and incentive to the startups. Department of Promotion of Industries and Internal Trade. And those who would like to know, this is quickly where you should visit. Startupindia.gov.in is the site where you can go and register. But it's not very easy. It requires profiling. It requires financial projections. It requires sensibly talking about what your product or services are. Today in the startup space, you don't see much of product companies. It's more about services, concepts being developed and being commercialized. So therefore, that also one should keep in mind. Moving on to benefits, I would start with income tax. And it is, I'm sure many of the businessmen would have heard this famous saying, for every individual, there are two things which are certain. One is tax, one is death. Everyone at some point of time end up paying some kind of taxes. Every day we pay GST when we consume. Income tax is the moment you start earning a decent income, you will start paying income tax. But then tax incidence over a period of time in our country has come down. Today the corporates are taxed at 25%, which is comparable with many other advanced economies, and the systems are getting relaxed. Tax administration, thanks to technology, thanks to the advent of the newer methods of assessment, today we go on a faceless assessment of reducing the corruption or human intervention and so on the story goes. Let's talk about angel tax. The moment you are identified as a worthy startup, there is someone who is interested, a private equity or a VC or an HNI, a high net worth individual who would find charm in investing in your company. Essentially, the shares will have to be allotted at a premium. They are called angels, and this premium is taxed. So if you are registered as a startup, this premium becomes absolutely tax-free. And in this budget, angel tax has been made applicable for NRIs also. Very relevant for Kerala and very relevant for Malabar area. Because I'm sure that when youngsters start working on startups here, you will get investments from maybe your own relatives, your friends, your seniors who have been with you, investing from abroad. The premium paid by a non-resident was not taxable and angel tax, but today that has also been made taxable. But if you are a registered startup, there is absolutely no tax on the share premium which you get on because it has to be equated. You have a concept and you are investing only 50 lakhs. Somebody finds a value of 10 crores in it and he wants to take a stake of 30%. So he has to bring in 3 crores. And how does that 3 crores will be equated to your 50 lakhs which you have invested and the proprietary technology, the IPR you're bringing into it? That's where the premium comes to play. That's a very, very important point. The second one, the other way of matching it is saying that, okay, you bring in your money and for the expertise that I bring in, I will get sweat equity allotted. Sweat equity or ESOPs, neither way. Sweat equity is Malayalam. We are pohari. We are pohari. For the sweat you have done, intellectual property rights by whatever name called. So there also that is taxed as salaries, as a perquisite. But if you're registered as a startup, even that is not there. The third benefit is very, very striking. You are given 100% tax exemption in a block of consecutive 3 years in the first 10 years of your existence as a startup. This is absolutely a very, very huge concession which one has to think of. So it would make sense because startups do not make profits in the initial years. Startups may not make profits at all. We have heard gurus like Chris Gopalakrishnan saying that the success rate in startup world is just less than 10%, 10 to 12%. I have a slide which will give you the shocking losses piled up by the startups which we all use every day. Today you buy a product for 20 rupees and you don't have cash. You do either Paytm it or GPay it. Now there are spaces where startups have not been able to. Take for example Paytm. The IPO of Paytm, the prospectus, the offer document of Paytm very clearly said, we have never made profits in the past. And also said, we are not going to make profits in the future. But those issues also get oversubscribed. I don't know why in the IPO space, but in the small startup space, particularly in the advanced economics like US, one reason for startups attracting investment is a phenomenon called, I hope some of you know, it's called FOMO, F-O-M-O. It's a fear of missing out. Fear of missing out. I take for example Kochosef Chitlapal, a very dear friend of mine. I was a consultant as IPO. The engineer mentioned that in my introduction. So the issue which was just 82 rupees way back in 2008 became a multi-bag. That's a different story. So a young group of people are approaching Kochosef Chitlapalli, or for that matter anybody. It could be Bill Gates or Steve Jobs like Vijay said, or a huge high net worth individual in the US or a PE fund saying that we have an idea like this. It can explode in terms of volumes. It can explode in terms of value. So then why don't you? So give it a shot. എല്ലാവർക്കും മലയാളം അറിയാം, കുറച്ച് മലയാളി സ്റ്റുഡൻസ് നോൺ മലയാളീസ് ഉണ്ടോ? ഇതൊരു വെരി വെരി ലോക്കൽ ടേം, ഒരു സിനിമയിൽ ഉപയോഗിച്ചൊരു ടേമാണ്, KKPP എന്ന് പറയും, കിട്ടിയാൽ കിട്ടി പോയാൽ പോയി. Thank you. So I'll use more of cinema terms so that I get a better response. So all the KKPP guys, thank you. So that's called FOMO. So they get subscribed and sometimes it clicks, but otherwise it doesn't click. But the official statistics, to quote Chris Gopalakrishnan and the IT experts, IT gurus we can say, that it is just 10 to 12%, even less. So that is there. So coming back to this core point of saying that, okay, you wait for 3, 4, 5 years and the 6th year onwards you start making profits. If you have an expectation that your profits are likely to grow up, your graph is going vertically upwards, and then it would make sense to defer this 3 years to the last 3 years. It could be 8th, 9th, 10th year, provided your going is good, or somewhere midway. And you will wait for the losses to get absorbed and then the company to start make profits. These are very important, very, very relevant benefits under the Income Tax Act. And the company law also, the startup companies are exempted from preparing cash flow statements. This is slightly technical. Financial statements are prepared, balance sheet and profit and loss account, but cash flow is also very important. But by law, they are not required to prepare cash flow statements. But I, for one, would strongly advise every startup to prepare cash flow statements, not on an annual basis, on a monthly basis. Because N.R. Narayanamurthy famously said, profit is often opinion, cash is reality. And I had gone to Muscat for a presentation. My co-speaker was to do a presentation on cash flow. Pattaviram, again, a chartered accountant. So he asked about cash flow statements and said, why do you need cash flow? You have your balance sheet which tells you what your position is. Your profit and loss account which tells you what your performance is, either a profit or a loss. But why cash flow statements? We had multiple nationalities of people and mixed responses. Finally, his next slide was very impressive. Turnover is vanity. Turnover is vanity. Profit is sanity. And cash is only reality, and hence cash flow statements. So it makes huge sense, but technically the law exempts the startups from preparing cash flow statements. They're called general purpose financial statements. And minimum board directors meetings and all that. But then here I'm telling you, I'm going to come to compliances a little later. I'm also working as a serving as a financial expert on KSIDC's Startup Seed Assistance Scheme, where we had 3 rounds of meeting after I was put on that position. And we're seeing that the startups here coming up with the presentations. Now you call a new term called pitch deck, am I right? Originally we used to call them project reports. They were renamed as business plans. End of the day, today is a pitch deck. But most of the pitch decks I have seen given by the startups lack head and tail. There are no financials, no, absolutely no idea what. This is like some internet downloads of pictures and the brain crashing out and all those things into ideas. That's wonderful, but there should be a financial sense made into that. Therefore, those compliances are equally important. Venture capital investors are allowed to invest in startups irrespective of any sector. There are a lot of sectoral caps under the FEMA, Foreign Exchange Management, but foreign venture capitals can invest into, if you are a registered startup, without any sector specific this, even agri-tech for that matter. There's generally a prohibition on investing in agriculture by NRIs and foreign investors. That's there. And borrowing up to USD 3 million per financial year with a maturity of 3 years. Funding, yes, funding is very, very difficult. Funding is tricky. Can the students tell me what about the funding window? You have only 1 minute for that. Funding window is there has been drying up of funds in the startup space. The kind of funds which you flow into the startup space dried up, and we called it, though dried up, it is a funding window. It still continues. When we come to valuation, we'll discuss that. Therefore, initially, one may have their own very limited resources, but then before the startup is ripe and ready to approach a PE or an organized investor, structured investor, we need to have funds. Therefore, we need governmental assistance. This is a central assistance which is known as a Startup India Seed Fund Scheme, which aims to provide financial assistance to startup at which level? Proof of concept level, prototype development, product trials, market entry and commercialization. At this point of time, if you are able to ready the prototypes and the proof of concept, all those things, then probably you can have external funding. So therefore, they say that this would enable the startups to graduate to a level where they will be able to raise investments from angel investors, etc., commercial banks and financial institutions. Banks even today, because of their very conservative, security-minded attitude, banks are still not comfortable funding startups. It's not easy. The first thing they'll ask for is collateral. So you cannot give your landed property as collateral and experiment on a startup. Therefore, you need funding. So the seed fund scheme is a 20 lakhs grant. It's a small amount, but I thought this is relevant. 20 lakhs grant and a 50 lakhs further assistance for commercialization, marketing, all those things. And therefore, that is one scheme which is centrally available there. And the KSIDC scheme, where I'm serving, is also something which gives you a 25 lakhs grant. I mean, it's a loan, but internally, there's a feeling that in the initial years, there won't be a huge compulsion to pay it back. But I think in simple terms, I can say that it's a loan, but kind of with a quality of a grant, which, of course, there is a repayment obligation, but which is not being enforced. And once you start moving, you also have working capital requirements. These are financial terms. If you are a product company, you may need to have inventory. You have to build up inventory. You may also have receivables. Your people, you would say that, okay, we'll take products, but we need 60 days credit, 90 days credit. If you go to the Middle East, and Calicut, some connection with Middle East is so inseparable, you would know that Middle East is standard norm of 90 days credit. I'm personally against business credit, but that's not the way the world works. World works on a lot of credit. A lot of people who work and live on suppliers' credit beyond their net worth. They extend payments, and even big players. And today there is a check on that. I'm coming to that a little later. On MSMEs, payments, there is a check on that. You cannot delay payments to MSMEs beyond a certain stage. So therefore, this is also another scheme about for Kerala Financial Corporation. Being Kerala, I thought I'll say as 90% of your order value, which is quite unlikely. Normally it is only 60%. 40, just to the 10% margin, KFC will fund you to the extent of 90% of your confirmed order value from established operators. You cannot play around, give a fake order and get it funded. Government entities, government reputed corporates, an interest rate of 10%. These are certain schemes which are very, very important. We'll move fast now. Coming to valuation. Now, valuing a business, valuation is very, very relative. വളരെ ആപേക്ഷികമാണ് business valuation. It is a perception of the promoter. It's a perception of an outsider. It's also possible that an outsider who has understood the huge innate potential of a business may value this business much higher than the owner's or the promoter's own perception, who developed this concept. But then there has to be balance which has to be struck. And that is where a professional, that's why I said, be realistic and seek support for getting business valuations done. It is not that every person has to do a business, can do a business valuation. It has to be realistic, appealing, and you should also have a bit of a rosy expectation on how the business can blossom forth. The most popular method is the income approach, because new gen startups are asset-light companies. You do not have huge land and building, you do not have huge machine. We are shifting from the brick and mortar model. Brick and mortar is dying. Of course, there is a coming back to manufacturing industries, make in India, the MSME sector. India is again next to China, and today there's a disfavor about China. In the recently concluded Davos round, a term has emerged which is known as ABC, anything but China. So India would become a forward destination. The Apple chip factory is getting done in India. So a lot of things are happening. Therefore, that's something that's very important. And income approach is where you are asset light and you are expecting income to accrue to you. So the discounted cash flow method again, which is technical. Students, business, finance students would to some extent understand it would better, not discounting the capabilities of the senior businessmen who are here. But these are certain new things which one should be aware of. And today, because of why this funding has happened is, people have started applying little more of skepticism in assessing business proposals, particularly by startups. So PEs and VCs are saying, there was an article in Business Line which said, valuations are overdue for revaluation. Business valuations, the rosy business valuations are not sustainable. I'm quoting the world's most successful investment banker. I'm sure you have heard of this person. Warren Buffett, when he was commenting on an IPO of a cab aggregator in the US called Life, about 2 years back. His valuation perception is this, that I should get a 10 to 12% pre-tax in 4 to 5 years. Even that kind of investment banker is willing to give you 4 or 5 years to, get rid of the initial issues, teething troubles as I call it, and start moving it up in the business. But that's very important that you should at that point of time 10 to 12% pre-tax returns as ROI, return on investment. That's a valuation perception. Of course, there are some more schemes which are there which are very relevant for startups. Many of the startups do not claim these benefits, so I thought this would be relevant. Rebate, 80% rebate of the cost of filing patents, and exemption from prior experience in answering governmental contracts and tenders. Experience is not required for startups. Startups are not experienced, they are beginners. Of course, they may have patrons, HNIs or directors, independent directors who would guide them, otherwise yes. Self-certifying, as we go faster, this I think we can move faster. Let me give you, in fact, there was an article which, again, I'm happy that Dhanam is associated with this. Mr. Kurin Abraham is another dear friend. I used to write a column in Dhanam magazine, which is captioned as Corporate Doctor. Corporate Doctor. And one of the articles they wrote was about startups. And where certain things the startups should take note of. This is a slightly different version of that. Some takeoff strategies as a startup when you get organized, when you start moving forward. You should have an ideal constitution of the business. You should decide at the very beginning itself. Most of the time we feel that they are in very liquid form. Say that some of us get to let's start a business kind of very loose kind of an environment. You should have a private limited company registered proper, or an LLP or a partnership form. That's very important, decide on that. And make a business plan. This is something what's lacking. Even when experienced people are investing in startups, they do not insist on a business plan. It talks about what the business is, what are the prospects, and what are the revenue, the business model, the revenue model, the likely bottom lines, a lot of things which you have to define. And what are the likely cash flows, from out of which finally it also helps in your business plan, also helps in evaluating or rather valuing your business. That's very, very important. And defining functional responsibilities. We heard this old cliche saying that everybody thought somebody would do it, and ultimately nobody did it. This happens in many of these startups where we are associated. So that framework guidance, that pitfall guidance is very important for startups. And financial discipline. The moment funds starts flowing in, there's a huge outflow on unrelated business. Even in conventional business, this has happened. If you look at many of the businesses which have failed, particularly in the real estate sector, I'm taking just a 30 seconds detour. You would see that it is because of the fund diversions that many of the businesses could not sustain, and they failed and disappeared. And of course, entities with public interest also, causing huge damage to the image or the credibility of the organization, and people losing money in multi-crore investments. Statutory compliances are equally very, very important. This again, I would call it a bit of strategies, and of course, being careful in having, ours is a law-ridden country. Multiple kind of tax laws, multiple laws, corporate laws, labor laws, and non-compliances can today become very, very expensive, prohibitively expensive. If you look at the Companies Act 2013, I'm sure that many of the people here have a lot of companies. But Companies Act 2013 is highly punitive. And the ministry belatedly realized that now they have a committee which is working on decriminalizing the Companies Act. Look at what they're saying. Because you are seen as criminals for non-compliances, and penalties were huge. And that's where cost of compliance is also high. Today, in every sphere of that we are doing, the new India story that is unfolding is quite exciting. A lot of investments are going to come into India, FDI and NRI investments, a lot of them are coming in there. So the key term which today we talk about is EOD, ease of doing business. It's hugely important that we make processes easy, delays reduced, and cost of compliance also brought down, particularly for smaller startups and MSMEs. So that's very important. While saying all that, it's important to have, larger companies have today company secretaries or lawyers acting as compliance officers. A friend of mine, a practicing chartered accountant in Bangalore, this is quite contextual, where he was asked by a German company who set up a major industry in Bangalore, in the suburbs of Bangalore. He was asked whether he can ensure compliance with all the applicable statutes in the country and make sure that we do not end up paying a single pie as penalties. And the fee offered was mind-boggling. I said, give it a shot. Don't confine yourself. That's the time you outsource. So you have somebody on, you're a chartered accountant, get a lawyer, get a company secretary, get a retired industry expert on board, and the fees is quite attractive. And finally took it up. So far, so good. That's how the story goes. So the foreign investors are quite scared about this thing, and we are also reducing the compliance burdens. But then today, as startups, one has to be extremely careful. If you do not pay up something, it accumulates. Then you have the additional fee, penalties, and all those things. And in the initial stage, both for startups and MSMEs, one thing we have noticed is that there are meetings every day, but there are no formal meetings. There are no minutes kept. Every day we talk about across the table, we sit together and discuss. Somebody in lighter vein was saying that this is not a meeting. For a meeting to be a meeting, there should be mineral water, there should be a writing pad, a sharp pencil, cashew and coffee. I'm talking about those kind of meetings, not every day, at least once in a month. This is very, very important. Wherever we go in as, system study is something which we do. One thing which is suggested is we call them for a meeting, of course with all these ingredients of mineral water and writing pad and all those things. What is scribbled is different, but then that's very important to formalize your meetings and also make sure that the reporting protocols. One who is supposed to report to me should essentially report to me, and whom I'm supposed to report to, I should be reporting it. Not in loose terms. Today you don't call it a report. Today we have multiple methods of work monitoring, workflow charts and all that. I'm coming to that in a next slide. Maybe I'll take another 5 to 7 minutes. Tech initiatives, while we talk about what is so futuristic about AI and related benefits, I have just looked at these functional areas of a company, or any entity for that matter. If you're a product company, your production management. If you're a service company, the way you render your services. Accounts and finance. Not because I'm a chartered accountant, this is a most neglected area which is landing up many of the entities into trouble. Year-end audit is thought to be inescapable trouble, and most of the time it is seen as just for tax filing. There's no quarterly financial reporting happening. Internally, there's no quarterly financial reporting happening. So these are areas where, for example, how many MSMEs here, or how many MSME definition when we come to, today MSME's upper limit is 250 crores. But then today we also have people asking, I have a 200 crore company, can I get a good accountant? I say, why not we look out? We'll pay up to 15,000, 20,000. Why people are so stingy on spending on this very important function. I'll come to that a little later. So this is where the human intervention has to be minimized, where technology has to come in. That's my version of the story. Accounts in finance today, surely essentially we should have ERP systems in place. And we have SAP and all that with the SME versions. SAP was at some point of time we thought, and there are a lot of companies which are into very, very effective ERP systems. All the end-to-end transactions are processed and you have information being got at every level. But the real fact is that the startups who are so technically advanced in their outlook when it comes to serving the outside world or the customers, in-house they are rotting or they are not gearing up to or using the best possible technology available. That is where I would, when Sujit wanted me to say that this is more about technology, I said, of course, we'll touch upon these important aspects, but my version of saying this is that yes, technology is not an enabler today. Technology is a driver, no doubt about it. How far and how fast we'll proceed with your business plans, our dreams in our businesses, how fast we'll blossom forth will depend purely on how we leverage your technology. And today audit firms, all chartered accountants in a row here, one standing, three sitting there. But many of us have still not thought about automating the processes. Just 6 months back, my firm, we thought of, that we are using something called Azure AI. So I'm trying to practice what I'm preaching, and it's a policy. As a policy, do not preach what I'm not able to practice. Therefore, accounts and finance area where all these things can be beautifully taken care of by technology, provided you have the right mindset and the willingness to change. Admin, of course, it's a huge challenge when you have the number of people there. Admin challenges are there. There are also office management softwares, all those things. But MSME space, you still have, there's a reluctance to invest in the basic hardware. You work with the PCs which have to be in the olden days, boot kicked, that kind of still on, and moving over to PCs and all those things. I'm saying this maybe sounds a little regressive, but factually this is happening. Because we do a lot of business consulting where we feel that all these things, including the office layout, where there are diagonal movements, all those things have to change. And human resources, HR. We have been helping many of our clients. I'm not marketing any of my services here. If that's a tone, it is not the intention of it. But then a client of ours, it's into e-tuition. They have about 600 plus MSc math teachers sitting in and around Cochin and taking tuitions for students in the US. And education, as you know, is a recession-proof industry. Nobody would compromise on the investment in the kids' education. You and I are no exception. So these people growing up, we suggested that they should move on from the old system. They are technically very advanced, but then when it comes to this thing, they are relying on us, some external consultants. And you have, the KEGA, there is a software, HR software, which is very effectively implemented. End-to-end solutions KEGA is providing. The other one is Great HR, which many of the small organizations are using. So any function of management which I have listed under 5-6 bullet points is that where you can substantially leverage on technology. And I'm not the real expert to advise you how to do that. But my point here is that we are way behind in imbibing technology in our respective businesses. And therefore, leave out meta words for the time being, which would have huge impact in the way we work, particularly in business training sessions, educational sessions, giving a virtual experience of taking out the students for an industry tour without actually being there. All those things getting completely revolutionized. But this is a point which I want to drive home. Marketing is no exception. You don't see a single hoarding of a new gen tech company as you travel by. You still have jewelers, you still have garment companies, textiles, all these businesses, builders, flat sellers, all those things, that advertising. So which means that marketing has essentially gone digital. And the reach is, phenomenally different. So that is another thing which essentially I have to leverage on. Digital marketing agencies are there, embark on them, get their services. And even having tie-ups with various possibilities. I had a small property in a place called Wagaman. I don't know how many of you come there. It's a small hill station property. Mohan sir has come there once. So then once we decided to start, how do we get on with this thing? And just listing on Airbnb, I'm just giving a simple example. Airbnb, it just took about 2 hours for a non-tech person like me. And the kind of business which brought in was substantially better than going for any kind of advertisement. And the system, it is so perfectly system driven. Within 24 hours of the checkout, your payment net of their commission 3% will come to you. And it comes as an advance message and the account is credited. It's so well listened. But Airbnb also, another startup which has made a huge IPO in the US, but the financials are suspect, if you ask me. But then the way they work with technology is very, very nice. And it, as a small, I would say as an entrepreneur, as chartered accountants in practice, we're not in business. It was out of passion that I created, then my wife started running it. But then there, the small thing which I'm saying is that made a huge difference. And also you could be taken for a ride by getting too much onto the digital network. So therefore, the last point which I've done here is that if you are a startup or an MSME, I would strongly suggest that. And if you wish to change, a mindset change, a system in which we are working, it's very important that you should do a complete comprehensive system study. Not by a chartered accountant, again, not marketing all the services that we render. We do, but then it could be a management consultant, it could be a business advisor, an MBA, an IAM product, all those things, who have some experience and tell you that businesses can be done substantially better. As Secretary of KMA, when I was in Delhi for the IMA meeting about 3 years back, I had the good fortune of interacting with Sanjeev Mehta, CNMD of MD and CEO of Hindustan Unilever. He has just stepped down. The new MD has taken charge. And something which he told us was very, very striking. I do not do many of the things which I've been doing 5 years back. But I make it a point to spend at least 10 to 15 hours every week. I repeat, 10 to 15 hours every week with my digital counsel. We have heard of medical counsel, legal counsel. The first term I was hearing from Sanjeev Mehta, again a chartered accountant. Sanjeev Mehta is a chartered accountant, but it is not that chartered accountants are great. So you saying digital counsel. So people at that stage, I today know that it is beyond their thoughts. The new gen thinking is completely different in launching a product, in penetrating into the rural markets where these products have to be familiarized and pushed in, including pricing, taking out the world parameters, all those things, best parameters. So these are things which we should really imbibe from business leaders. This is quickly, just because there are a lot of colorful slides from Srikanth and all those things, I thought I'll also add some color to my presentation. This is a list of 102 unicorn startups. I'm sure the students know what a unicorn is. Otta kombola or jeeviya. But they should have a valuation of 1 billion US, which is 8,200 crores as of now. And I've circled something there. That is only unicorn I could find from Kerala, Open Financial Technologies. Instantly, my daughter is interning there in Bangalore. Dina Jacob, one of the Anish Achudan, Mabel and Anish's brother, what's his name, I forgot. And of course, Dina as a chartered accountant, all of them are from Kerala. They have unicorn. And they are into, I can say, bankless banking. And they have developed this product and they got the huge valuations and therefore this is striking. So unicorn, to be a unicorn is something really great. And then once you start get funding, it's like individuals had said that to make the first million is only difficult. To make the first million is very difficult. After that, if you are focused enough, millions will accumulate our millions. Same is the case with this valuation. But then look at Byju's. Byju's, we have a problem. We have, again, the Kerala promoter, but then compliance levels are bad and they are under the lens now. They have not filed their 22 results and making huge losses. So that was about success stories, and also quickly look at the top loss-making startups. It is incidental, giving some disturbing, shocking statistics, still interesting. BharatPay has a maximum of 5,500 crores. Where is your Paytm? Paytm is 2,325 crores. Unacademy. We are seeing a lot of advertisements. Swiggy, where all of us using. While we are coming up, I didn't have my lunch, so we're talking about lunch. Suddenly, Swiggy bike overtook us, and Swiggy is delivering inside IM, I think. So these are all Oyo, PhonePe, all of them have not been able to rise up. And I have been highlighted, the data excludes startups that have not filed their financial year 2020 earnings with the ministry, including companies like Byju's, Upstocks, and Razorpay. Upstocks is a company which has completely disturbed the retail broking in the country using technology. That cannot become a business killer. I would say that's an unfair practice. I have to conclude. I'm sure I'll conclude in 2 minutes. So on the story goes, that is interesting. On coming to MSMEs, 32% of the GDP is coming from MSMEs. They are recognized as powerful engines of economic growth. This is the definition of MSMEs. So you look at whether you're micro, small, medium enterprise. I would probably leave this slide deck with CMA, and you can share with the members. Then we have the budget of time we have to conclude. And a lot more things to be said. Ministry, of course, benefits. Yeah. This is something you have, as MSMEs, you have a right to get your payments within 45 days. Please know that, those who are in the MSME space. But many of us are not using that facility. State level councils are there, MSME councils are there to which you can apply. Collateral free credit for MSMEs. I was just reading yesterday that the extra credit, 25% credit which is extended to MSMEs during COVID time, it reached 3.75 lakh crores. Financing, I would jump over all this. Lastly, this is something which came in just day before yesterday. I was just saw this yesterday and thought that I should share with this. This can be a game changer. This can be a mindset changer in MSME. The inherent limitations which are plaguing the MSMEs and startups, which I thought I covered during the presentation, are now getting resolved. Today there's a lean manufacturing processes which the government is promoting in the MSME space. MSMEs have been there, they're working the way they have been, there's no change in the way they work. So therefore they are bringing in lean manufacturing practices like the 5S, the Japanese practices, Kanban, all these things, and the Minister Narayan Rane says that this can be really a mindset changer, a game changer. And mind you, if you're willing to change, and change is inevitable, unless we change and transform, the future is bleak. Otherwise, you have a great future. But then here, if you're willing to change, look at this, the government will fund you 90% of your implementation fee in bringing these good practices, which advanced economies, which we see with a lot of envy, like Japan and all that, Toyota, all those companies have experienced. So I think I had to rush through my presentation. So thank you once again for having me here. With that, let me conclude.
Thank you, dear sir, for your meticulous,
and time permits, I can take a few questions if time permits. It's up to the organizers. Once again, a big thank you.
One or two questions from the audience. If there are no questions, let's move on to the next business. I request Chartered Accountant Devi Chandrasekhar, Convener AMC, to present the speaker with a token of love and appreciation. Now, let me call upon Chartered Accountant Dawood, MC member, to propose the formal vote of thanks to this session.
A very good evening. So, needless to mention, yet another good session on the second day of AMC 2023. I take this opportunity to place on record our gratitude to CA Jomon K George for brilliant deliberations on the topic startups and MSMEs, ecosystems, benefits, and tech strategies. Thank you, sir. Your session was very informative and you kept the audience engaged. Now I express thanks to all delegates for being attentive and patient listening. I'm sure you all have a lot of takeaways in today's session, and see you as startup entrepreneurs in the coming days. And thanks to CA Ranjini for the orderly conduct of session and CA Ravi Chandrasekhar for the handing of memento. Thank you all once again.
Thank you, sir. Thank you, the entire team, for this wonderful session.